impact investing is also like a whole spectrum of activities, going again from like investing for capital preservation, which is non-return seeking, to what's termed market rate impact investing, which is impact investing funds that keep up with traditional funds effectively is the best way to think about it. Most people at business school, I imagine, end up like on the like more market rate side of the impact investing spectrum. And a part of that too is because most of the opportunities are there. So then I guess even going further down a level, like within market rate impact investing, you have, your traditional spectrum of asset classes and stages. So you have, early stage venture, whether it's seed, accelerator stage, Series A, Series B, into, growth, CDE, and then later stage like private equity and buyout and debt. It's all, every asset class you imagine is there, like including real estate and other ones as well. So then like once you figure that you want to be in impact investing at a market rate institution, then it's about trying to decide what asset class works best for you. And this is where I think, in my experience, like prior experience and prior background sort of influences where you land. So my previous work was mainly in credit and later stage, like really numbers and analytical heavy. So like if that's the background that you're coming from, like from financial services, consulting, like anything that's, really numbers and data heavy, I think people gravitate towards later stage. Earlier stage, like venture, I guess, is like, you can call like everything I bucketed early stage as venture capital, but impact investing venture capital. And if you're at early stage, the skill sets can vary a lot depending on fund, but I would say it's a lot friendlier to non-traditional backgrounds. I've seen teachers become education technology investors, like people with healthcare backgrounds, investing in healthcare. It's easier to make the transition because a lot of the work in early stage investing, impact or not, is understanding like the sector and the businesses and knowing how to do research into an area. Like when you get a new company, it's a startup, it's doing something completely new. It's less about the numbers. The numbers are just a guess, at that point. The founders aren't even sure what's next. It's about like understanding the sector and the company and everything around it and whether the business model is viable. So, on the spectrum of impact investing, at least for market rate, I think that's how I would categorize it based on previous experience.